3.2% by the end of next year, which is very aggressive. So let's presume that they do come through. We've got other countries in the world printing money at the same or faster rate than the U.S. on a GDP adjusted basis, and I'm talking about Japan here. So even if the U.S. is still continuing to print dollars, and if they were to taper even a little bit more than enough is taken up by others such as Japan.
Yeah, I mean,
so that's probably.
I was just going to say, I mean, GDP side of it and the central banks is, of course, one side of it. But another reason investors buy gold is because of inflation. And right now, inflation is nowhere to be found, as Josh Brown put it this morning on television. What are your thoughts on inflation in here? And do you actually see, the risk of deflation or at least disinflation in the economy?
Yeah, no, that's a good point, and you're right. By the PCE deflator that the Fed uses as one of its measures, or the CPI, or however you want to measure it. Yeah, there has been very little to no inflation, and gold over history has been a protector of wealth during inflationary times, and it's also been a protector of wealth during disinflationary times or deflationary times. And so right now, I think we sit in that, as the data comes out, we will be constantly observing. But I think the data is suggesting that we're moving into deflation. And that, of course, is something that Mr. Bernanke has already stated he will not let happen. He will not let happen here. So, as far as the inflationary argument goes, I think what you're implying is correct. Is that we're not seeing any, and people aren't buying gold for inflationary purposes, but for monetary debasement, for savings purposes, for portfolio insurance. You never buy rain insurance, or you never fix your roof while it's raining. You always fix your roof while the sun is shining. So I think the current price provides an opportunity to add to some of that portfolio insurance for later day.
Yeah, I mean, of course you have these economic drivers, but you also have the demand side of it. And in April, we actually saw very large uptick in demand in China for gold. China is one of the biggest consumers of gold. They purchase a lot of it. And that was after a recent price fall. Do you expect demand to pick up again now that we've had another leg down in the price of gold?
Yeah, that's a great point. We've started to see, we started to hear stories, anecdotal stories of this physical demand picking up again with this recent price drop, and so I think we will continue to see that in the emerging economies. China is probably the largest one consuming gold out there, and an interesting fact came up. We wrote we write an article every day, and I'm a contributor to it. And the way we like to put it, or the way I put it, was India's declared war on gold, and they've increased import duty 2, 4, 6, 8, up to 8% now. On July 1st, the Jewelry Federation banned the selling of gold coins in India. And what we see happening is that the gold trade in India is now moving offshore, so it's moving to Dubai and other places. But I tell you one thing that we didn't predict, and it is quite shocking in the precious metal space, is that they started to import way more silver, and the numbers are in fact staggering. They've imported in May about 920 tons of silver. Now, to put that in perspective, we only produce, or the world produces, 2,400 tons of silver. So if you annualize that 920 ton number, it works out to about half of mine production. So, and of course, there's not that much silver for investment purposes. So what it looks like happening is that silver is winning the India's war on gold, and Indians are purchasing silver instead of gold, which is a brand new phenomenon in this precious metals market.
So do you believe in the theory that high mining costs might create a ceiling for prices?
What cost?
High mining costs.
Well, high mining costs usually would in fact set a floor under the gold price. And however, in commodity markets, the price can go below the marginal cost of production for sometimes it can be years. We've seen it in platinum now for approaching 2 years, and we've seen it in silver back in the early parts of the decade. So, it is it does act as a floor, and we've already heard stories of mine shutdowns and supply shutdowns, which should only help the price. But it can be below marginal cost of production for a period of time before it corrects itself.
So, I mean, do you think that silver is a better play here for investors than gold? Because, as you mentioned, the India story, as well as silver does have some industrial use, and we are potentially seeing some signs of life in the auto industry, for example. We had some good auto numbers out today.
No, that's right. I brought that out I printed that out so that we could talk about it. And I tell you what's interesting in silver. The GLD has lost 28% of its gold that it holds. And in contrast, silver has lost 1%. So over the same time period, and this is year to date, silver investors have in fact stood in to maintain their ownership of silver, even despite silver's been hit harder. So I think at the moment silver looks pretty interesting as a contrarian play. I mean, there's been lists of people who've now come out against gold and silver, and gold and silver now look like they're contrarian plays. And there's two pieces of data. One that you spoke about with the auto numbers, which are, the headline is a 66-month high for new car sales. So that's fantastic. And the best way to participate in that for investors is in palladium. And palladium is the best performing precious metal this year, down only 3% or so. And into every car goes. Every gasoline car goes a little bit of palladium. The palladium market's forecasted to be in a deficit position for the next 8 to 10 years as well. So if you're looking for a precious metal with an industrial use, palladium is it would be a good choice given these car numbers.
Can you tell?
Sorry.
Can you tell us a couple good ways to play palladium?
Sure. There's a number of ETFs out there. We offer a trust, the Sprott Platinum and Palladium Trust. The symbol is SPPP, and that's listed in New York. And we hold 50% platinum and 50% palladium. And there's also some other ETFs out there. I mean, I would suggest, given the state of the platinum miners and the palladium miners, that investors focus on the metal versus the individual company stocks. And I'll give you a good piece of data for platinum. So of course, platinum and palladium are used to reduce smog, and we know that it's a big issue, of course, in China. And on Friday, the U.S. Embassy put out a warning, and just to put this in perspective, so they measure the fine air particulates, and a measurement of 2.5 is considered a health risk. And on Friday in Beijing, it hit 520. So there's a huge air pollution problem in China, and one of the best ways to address it is using smog removing processes that include platinum and palladium.
A lot of great insight in there you gave us, David. Thanks a lot.
Great. Well, thanks for having me.